I was going to say, Ali in the chat says, where do you think Hood price looks frothy? Well, I find the interesting part is that it's hard to even nail down how much they're going to do this quarter, right? So it looks frothy where it is if you were to take estimates that looked at this company 2 months ago. And now it looks undervalued. And so the price has changed essentially double over the last couple of months in terms of revision. So it's very hard to nail this one down.
Yeah, and analysts, they're all over the place, and it makes sense just because so much can change. And if markets are very risk on this quarter, even with the $45 million settlement that they have, they could post up numbers like they did before. Now, the year-over-year comp is harder, so it's not going to be a 100% revenue growth rate year over year. But 90% of, by the way, the other part too that's really exciting about this, and Vlad highlighted this, I think Jason Wells did too. 90% of their costs are fixed costs. So when things are just thrumming along and it's a massive bull market and it's risk on and they're launching, all these other places, it's not like their costs rise in proportion to that. It's exponential. So hard to say. And it's really tough to value too, something that grows 100% at this size year over year. And the next quarter won't be as good, but it's still going to be amazing. It's tough.
Yeah. Like frothy to me would be if we hit like $60 tomorrow, or 65 or something. But even then you got to just see if the growth estimates raise up. But let's say we hit 50 tomorrow, right? And then we consolidate between 45 and 50 over the next month, which I think would be really healthy. And then over the next couple months, as the growth is still above 30%, you're looking at June, July closing in on 65, 70 bucks. I think that's a really healthy trajectory, assuming there's no like crazy crypto movements that would put growth estimates higher. But again, it goes back to the conversation. It can't be like a Palantir that gets expensive based on the perception that they're going to grow, and therefore you get in before they grow because we already see their growth. And if they're not growing, market's just not going to buy Hood. They're going to be like, all right, this is expensive right here because they're not showing the growth. So I think it'll always trade relatively reasonable. 2021 was a different era because interest rates were zero. I think now that we're much more normalized, it won't ever get to the point where it's that frothy.
Do you think just tracking Robinhood to like the revenue or something, in terms of a multiple, that just sort of stays consistent because the markets can only deal with about a month worth of information. They can't let their minds get too out of whack. I mean, it really could only get frothy if people suspect that, going from 2024 to 2026, that the markets in general are going to be much more bullish than they actually are. Mm-hmm. And that if you're really projecting out future growth, but markets aren't. Look at what Wall Street's expecting for Hood. It's like 12% growth, 9% growth or 7% growth or something like this in 2026. It's incredibly bearish. Like they're almost expecting a massive correction. So I think that's already what you're seeing, which kind of puts it closer to fair value, if anything.
Yeah, I think it's, for me, slightly above fair value. If this Friday we get above $54.99, I think it's frothy. I may or may not have $55 covered calls that I sold.
That is fair. That is fair.
And like I said on the Market Madness or whatever, the other stream that we were on, I hope it happens to you. I hope
you want your covered calls to get called away.
No, I will roll them. I'm not.
No, I'm saying, Tanner, why do you want them to get called away?
So then the stock is above $55 a share for everyone. One man's sacrifice is everyone else's benefit. So I hope
turn me into Tevis.
Roy, if you're the Tevis of Robinhood, everyone, that's what we're hoping for. You'll need to fall on your sword for the benefit of the rest of the community. Thank you for your sacrifice.
I have had to roll Robinhood covered calls once. That's not this allotment or anything, and it was thankfully not very painful at all. And there's one other time when I let some shares go away, and it was like $29, and I'm mad at myself. So I bought those shares back, at a higher price, but I'm like, what am I doing? So I'm being very careful, I think. But the thing is, I sold the covered calls like on Thursday. So it's like, the thing is just, I maybe just need to stop selling covered calls in Robinhood right now. The strikes are not even that high. Like that's a frustrating thing. I think somebody said that they're supposedly coming out with 70s.
Oh, they're out. Their 70s are out.
They're set there right now. Okay, good.
We need
Yeah, they
75.
weren't when I sold these. I was like, well, I don't see it going to 55 in a short week, but it might. Good problem to have, though. I'd rather have this kind of problem than the perpetual dip that we had in 2022, which was great, in hindsight. But man, bear markets are good teachers. They're not a lot of fun at the time. They're fun a couple of years later.
Yeah.